Yes. So what is volume? Hello, hello. Yes. Morning 7 o'clock you start speaking till evening 7 o'clock. Same energy? Full capacity? My God, hats off. Same energy had you utilized for your studies. It would have been so better. Talking. Are you determining, like talking about the world politics or the economic crisis in some country or something like that? Domestic matters or international matters or friendly matters? I don't know what you're talking about. Gossip matters. That is the matter. Okay. Right. So anyways, right, we started looking into, yes, what are the points that we have already discussed so far? One, we discussed regarding the breakup of the 100 marks. Is it right? Then after that we talked about the engagement and quality control standards, which are of 5 types. The standards on auditing, standards on review engagement, standards on assurance engagement, standards on related services, and the standard on quality control. Then we also looked into what do you mean by the financial statements, what all is included in the financial statements. And then we also looked into the definition of audit. What is audit? Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, whether such examination is conducted with a view to express an opinion thereon. And in order to express an opinion, what is it that the auditor needs to do? He needs to use a phrase. And what phrase is used by the auditor? True and fair view, or present fairly, or sometimes in case of special purpose financial statements we can also say prepared, that the financial statements have been prepared. Okay, right. Then after that we also came to the point that regarding the financial statement should be prepared in such a manner that the financial statement should not be misleading, they should be honest, right? And how the auditor can satisfy himself about the same. So how he can satisfy? One, checking that the entries, the financial statements are prepared on the basis of the entries in the books of account. Then entries in the books of account are supported by the adequately supported. Then none of the entries have been omitted, and nothing which is not there in the books has found place in the financial statements. Then the information given in the financial statements is clear and unambiguous. Then the financial statement amount has been properly classified, described, disclosed in accordance with the accounting standards. And finally, last, what did we say? The statement of accounts as an integrated whole give a true and fair picture of the operational results and the assets and liabilities. Is it clear to all of you? Yes. And then as an auditor, to express an opinion on the true and fair view, what are the 7 points you need to check for? Assets are neither undervalued or overvalued. Next one, no material asset is omitted. Any charge created against the company's asset has been separately disclosed. Liabilities have not been omitted. Then balance sheet, profit and loss account is as per the schedule 3. Then accounting policies have been consistently applied, and exceptional, unusual, non-recurring items, have they been separately disclosed, right? Exceptional, non-recurring, non-recurring items, have they been separately disclosed? Okay. And then after that we came to the discussion of SA 200. What was the title of SA 200? Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing, right? I hope each one of you, from the first till the last, all of you are listening to me, paying attention. Yes, are you all with me? Okay, right. So SA 200, overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. And now, what is the overall objective of the independent auditor? To obtain the reasonable assurance. Reasonable assurance regarding what? That the financial statements are free from material misstatement, whether due to fraud or whether due to error, thereby enabling the auditor to express an opinion as to whether the financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then to report the findings of the auditor in accordance with the standards on auditing. Right, so this was the overall objective, and from the overall objective we extracted 3 terms from there. Which 3 terms we extracted? Applicable financial reporting framework, free from material misstatement, and reasonable assurance. Are you all with me? Free from material misstatement and then the reasonable assurance. Applicable financial reporting framework means the framework, the laws and regulations which are to be followed by the management while preparing the financial statements. Example of an AFRF would be the Indian Accounting Standards and Schedule 3 to the Companies Act. Is it right? Right, that is AFRF. What is a misstatement? Misstatement means difference between what is and what should be. What is material misstatement? Material difference between what is and what should be. What is free from material misstatement? There is no material difference between what is and what should be. In simple language, there is no material fraud or error in these financial statements. Is it clear to all of you? Okay, and then we came to the term reasonable assurance, which we said is a high level of assurance but not an absolute assurance due to the the reasonable assurance is a high level of assurance but not an absolute assurance. Why? Because in an audit we get the persuasive evidence and we don't get the conclusive evidence, right? Had we got conclusive evidence, we would have given the absolute assurance. Because we get the persuasive evidence, we are able to give only the reasonable assurance. Are you understanding that? What is conclusive evidence? Only that is true, and any other possibility is ruled out. There is no possibility of any other thing being true. Like say your foundation mark sheet. Whatever is there in your foundation mark sheet, 50, 50, 50, 50, 200 out of 400. And now that is a fact. You understand? So that is conclusive evidence over there. That is conclusive. There is no second thought about it. But on the other hand, if I look into the rent agreement of the client, do you understand rent agreement? Client is running their office from a rented premises. They've taken the premises on rent from a particular party. So they have entered into a rent agreement. And in this rent agreement, it is written that the rent per month is 1 lakh. Now you look at the evidence prima facie, you think that yeah, should be. Yeah, they are giving me the rent agreement and it's giving the name of the entity, it is signed and it says rent per month 1 lakh. But who knows? And actually, if I ask another, like say you have office on the first floor and that another person is having office on the second floor. So same building, rent should be same, no? Same building, more or less rent should be same. Your client is paying how much? 1 lakh per month. And the office which is just above you, they are only paying 20,000 per month. You understand? No? So probably they are doing some manipulation of the expenses or something over there. Are you understanding that? So it is persuasive. It is not conclusive. Are you understanding? It is most likely to be true than not. It is most likely to be true than not. So I'm not doubting. I'm not being suspicious. See, as an auditor, no, you're not supposed to be suspicious. If you start, you have to be cautious. You should not be suspicious, because if you start becoming suspicious, then you're not doing an audit. Then you do an investigation. Yes, and in an audit, you have to express an opinion. In an investigation, you need to detect a fraud. Or detection of fraud is not the primary objective of audit. Expression of opinion is the primary objective of audit. Are you understanding? So as an auditor, you're supposed to be cautious. You're not supposed to be suspicious. Do you understand the point? So as an auditor, whatever evidence we get, it is persuasive in nature and not conclusive in nature. Are you understanding that? So reasonable assurance is a high level of assurance, but not an absolute assurance. And then I told you, Reliance Industries revenue, how much it is? 4 lakh crore. Is it possible for you to check the entire revenue of 4 lakh crore? Or they have 5,000 crore rupees of salary expenditure? Is it possible for you to check the entire salary expenditure? No. So you go for the sampling. You go for the test checking. That means why we are giving reasonable assurances, because there are certain inherent limitations of an audit. So now the next question which we are going to discuss over here is regarding the inherent limitations of an audit. Right, so inherent limitations of an audit. Right, so what is reasonable assurance? Right? It is a high level of assurance, but it is not an absolute level of the assurance. An auditor is giving reasonable assurance. That means now management has no responsibility to prepare financial statements. Auditor is giving reasonable assurance. Does that mean that now there is no responsibility on the management? No, the preparation of financial statements still continues to be the responsibility of the management. And here next to management, you are seeing one more term over there, TCWG. What is this TCWG? It is those charged with governance. Right, so this is some terminology relating to audit. Like now next time when you see AFRF, do you know what is AFRF? Applicable Financial Reporting Framework. Likewise, now over here we have is the TCWG, those charged with the governance. What do you mean by TCWG? In very simple language, they mean the highest level of management in an organization. That's the highest level of the management in an organization. Like, so say in a company, there would be the board of directors. Do you understand board of directors? Right? They have the board of directors of a company who are giving the strategic direction to the entity, who are giving the strategic direction, okay, which new product we should launch, what new business we should do, right? So strategic direction to the entity. So they are the board of directors. Under the board of directors, you have the management of the company, right? They do the execution part, okay? Whatever strategy has been decided, that is by the board of directors, that is executed by the management. And below the management, you have the employees, right? You have the purchase manager, sales manager, inventory manager, and so on. Okay, are you listening to me? Right? TCWG, they give the strategic direction to the entity. Management, they do the execution part. So like, you know, example, if a company in the board of directors, if they have an audit committee members are an example of TCWG, but the company has a CEO, Chief Executive Officer, company has a CFO, a Chief Financial Officer, then these are examples of the management. Company has a Vice President, you know, finance or something, then these are the examples of the management. Okay, yes, TCWG, management and the employees. Who is highest? TCWG. Okay, now listen to my sentence very carefully. Are you listening to me carefully? Yes. In some companies or entities, it may so happen, that TCWG and management are one and the same. In some companies, it may happen that TCWG, like it's a small organization, they don't have separate TCWG and separate management. It is like they only decide the strategy and they only do the execution, right? So is it possible that TCWG and management could be one and the same also? Yes. Is it possible that they could be different also? Yes. It depends upon the hierarchy which is created in the organization. It depends upon the organization structure. Right, so you need to see, okay, are the people who are doing the strategy decision, are they also doing the execution part? Oh yes, then the TCWG and management are one and the same. You say no, people who decide the strategy different, those who do the execution part different, then you say TCWG and management are different. Are you understanding the term TCWG? Simplest way to understand TCWG is the highest level of management in an organization is referred to as the TCWG. Below the TCWG, you have the management, and below the management, you have the employees. Is it clear to all of you? Okay, so now whenever you come across this term TCWG, will it be good for all of you? Right, so the audit of financial statements does not relieve the management or TCWG of those responsibilities. That is, preparation of financial statements still continues to be the responsibility of the management or the TCWG. Why they've written or? Because I told you, in some companies, management, TCWG may be one and the same only. And some companies, they may be different. That is why they've written management or TCWG. Okay, right then. Now, auditor is saying, like say these are the financial statements of Growth Limited. Are you all with me? Right, and this is C.S. Sparkle who has done the audit of the financial statements of Growth Limited, and C.S. Sparkle has issued an independent auditor's report. And what opinion has the auditor expressed in his audit opinion? That the financial statements of Growth Limited give a true and fair view. Do you understand that? Today, did I show you a report also? Right, so auditor has done the checking of the financial statements, and now he's issued an audit report, and in the audit report he's expressing an opinion saying that financial statements give a true and fair view. Okay, now if auditor, so that means auditor has given a reasonable assurance, is it right? That means auditor has given a reasonable assurance. Okay. Now, if the auditor has said that this company financial statements are true and fair, does that mean that the management of the company is excellent? Does it mean that the future of the company is very bright? Auditor has said true and fair. So you say, oh my God, if auditor said true and fair, that means this management might be doing a mind-blowing job. That means the future of this company would be very, very bright. Auditor saying true and fair, can you conclude this? No, auditor saying true and fair, what does it say? Is no assurance as to the future viability, future performance of the entity, nor the efficiency or effectiveness with which the management has conducted the affairs of the entity. Right, so I'm not doing a management audit. You know, there is in CA final, there is a chapter called as management audit. What is management audit? Where you audit the decision making of the management. You tell management you've not taken the right decision, you've taken the right decision. In a decision making audit, here am I auditing the decision making of the management? No, I'm auditing the financial statements. Like say, let's try to develop a better understanding. Right, say company had 100 crore rupees with them. Now with this 100 crore rupees, they had multiple options. One, with this 100 crore rupees, they could have purchased a plant and machinery and started some new line of production. Second option they had, they could have declared the dividend. Third option they had, they could have given the bonus to the employees. Or fourth option they had, they could have done some investment in some subsidiary company. And these are the options. Out of these options, say the company has decided to purchase a plant and machinery. Who has decided? Management TCWG. They have decided that they will purchase a plant and machinery. As an auditor, what is my role? What is my responsibility? To check whether plant and machinery, the value is proper, whether incidental expenses have they been added to the cost of the asset, whether installation charges have they been added to the cost of the asset, then whether the asset has been properly depreciated, then repairs and maintenance have been charged to the profit and loss account and it has not been capitalized, whether in AS 16 or the AS 10, whether they have been complied with. This is my responsibility as an auditor to check all this regarding the plant and machinery. Because what happened, I went for the audit. When I went for the audit, I came to know that this company had 100 crore, and from this 100 crore, management has decided. From where do I come to know management decision? By looking at the minutes of the meeting. So from the minutes of the meeting, I come to know that they have decided to purchase a plant and machinery, and they've purchased a plant and machinery. So this is all the checking which I do of that plant and machinery. Now, as an auditor, right, yes, as an auditor, now can I raise a question regarding the decision making of the management? That management, what, you don't have any brains only. Why did you purchase plant and machinery? It would have been 100 times better had you given bonus to your employees. They would have been so happy. It would have been better if you would have given dividend to your shareholders, or it would have been better if you invested in the subsidiary companies. No. Are you supposed to comment on the decision making of the management? No. Right? Whatever decision. This value of the plant and machinery is not right. Then will you report that? Yes. If that is not right, will you report that? Yes. But will you comment upon why did you purchase plant and machinery? No, you cannot question that. Are you understanding that? So, that is the point over there. Reasonable assurance. The auditor's opinion does not assure the future viability. That means the future of the company is very bright, nor the efficiency or effectiveness with which the management has conducted the affairs of the entity, or that, the management of the company is very excellent. Auditor giving a reasonable assurance does not give an assurance regarding these. Are you understanding that? Auditor giving a reasonable assurance does not give an assurance regarding these. Okay. Right. Then after that, reasonable assurance is not an absolute level of assurance, because there are the inherent limitations of the audit which result in most of the audit evidence on which the auditor draws the conclusions and bases the auditor's opinion being persuasive rather than conclusive. This sentence you have to learn it by heart. Reasonable assurance is not an absolute. Everybody please repeat the sentence with me in the class. Say it with me. Reasonable assurance is not an absolute level of assurance because there are the inherent limitations of an audit which result in most of the audit evidence on which the auditor draws the conclusion and bases the auditor's opinion being persuasive rather than conclusive in nature. Right? So reasonable assurance is not an absolute level of assurance. Tell me once again why it is not an absolute level of assurance. Due to the inherent limitations of an audit which result in most of the audit evidence on which the auditor draws the conclusion and bases the auditor's opinion being persuasive rather than conclusive in nature. Is it clear to all of you? Okay. Right. This part of the sentence, I'll come to it later. I've left one part of the sentence, right? You see 5 points over here. 1, 2, 3, 4 and 5. I've discussed 1, 2, 3 and 5 with you. 4 I have not discussed with you. So that I will come to it later. Right? 4 I will come to it later. Okay. Right. So right now we are going to discuss the next question over us, which is the question regarding the inherent limitations of an audit. Right? So again an ATF question. What do you mean by ATF? All-time favorite of the ICAI, right? Or today I was, just thinking, I can tell it that this is an Oscar-winning question or Oscar-nominated question, something like that. Anyways, whatever I say doesn't matter. Only it matters if it comes as a question in the exam. Okay, right. So sit straight in the class. That's very important for you in the class, and I hope you continue to write with me. I'm going to check your books. Okay, I'm going to check your books, and I don't want dirty writing. Okay, don't write here and there like an unorganized manner. Have some nice fluidity in your writing, nice presentation, good color combination, good, somebody should feel like reading from the book when they open it later on, or something written here, there, not understanding anything. That should not be the situation. Okay, right. So now listen to me. Inherent limitations. So yes, what are we going to discuss now? We are going to discuss inherent limitations. Let me tell you the agenda. Then we are going to discuss the advantages of an audit, because obviously if there are some limitations, advantages, disadvantages always go hand in hand. So we are also going to discuss some advantages of an audit. Then we are also going to discuss certain ethical requirements, and then we are going to discuss the qualities of an auditor and also the discussion regarding the independence of the auditor. Also the discussion regarding the independence of the auditor. Right? So this is our first line of discussion, and then after that I'll tell you what next we are going to discuss. But as of now, these are the points for our discussion. Each one of them is a question in the exam. Right? Each one of them is a question in the exam. How can we justify that, or how can we prove that? True and fair view, a question in the exam. Right? Then after that, if you look advantages of the audit, then there is a question regarding the inherent limitations of the audit. Right? Inherent limitations. Then the qualities of an auditor. Right? Qualities of an auditor. So whatever I just told you right now, the headings for each of them we have a question. Right? How can I come to know that you are listening to me? I am not getting that comfort or confidence or, looking at your faces. Then after lunch effect, why you ate lunch? For till now, don't have lunch, no, till next few months or something. You'll have to have? Oh, then have. No? Even more worst. Okay. But eat little, no? Huh. Then what you will do if you are feeling sleepy in the class? You'll pinch your neighbor. You'll pinch your neighbor. You'll say, ma'am, we start. Their students, they are very sympathy seeking. They'll say, ma'am, you don't know, I come from far off place, morning 5 o'clock I start, then I take metro, then I reach here because I have to get the first seat, I come early, I have to catch place for my friends also, so then I come at 6:15 only, then I'm sitting over here for whole day, then I prepare notes also, in the break also I study, and then by the time I reach home in the evening it is 8 o'clock. Arey, so why are you telling all this story? For who are you doing it? For yourself only, no? What is the big deal? They'll say story, ma'am, you don't know. Arey, ma'am knows everything. Without that, I didn't become a ma'am. You understand that, no? It is not possible. We have all gone through the same process. This is the same factory which all you have to go through. Okay, so no ma'am, 2 o'clock in the afternoon you're saying something. No, but no, whether it is 2 o'clock in the afternoon or 2 o'clock in the night, result will come. That day, that time, the time will not matter, no? Will it matter? Yes, how many of you are listening to me? How many of you are listening to me? Half of the class is still not listening to me. Just look at the guts. Look at yes? How many of you are not listening to me? How many of you are not listening to me? Okay, so you're all listening to me. Great, great, great. Okay, right. So anyways, now coming to the next heading over there, which is regarding the inherent limitations of an audit. So actually, it should be like that. No, okay, auditor said true and fair means it should be the end of the world. You understand? No, my father has said that I can buy an iPhone. That means finish. Now nobody can stop me on earth from buying an iPhone. You understand? No, end of the world. Or no person walking on the street said true and fair. Auditor said true and fair. So it says now finish. Everything is right in the company, nothing is wrong in the company. But we said no, reasonable assurance is no assurance as to the future viability nor the efficiency or effectiveness with which the management has conducted the affairs of the enterprise. And we said reasonable assurance is not an absolute assurance due to the inherent limitations of an audit. Right? So it says whatever best possible audit you do, these are always going to be certain inherent limitations of an audit. What are the inherent limitations of an audit? Inherent limitation number 1, nature of financial reporting. What is FR? Financial reporting. Second inherent limitation of the audit is the nature of the audit procedures. The nature of the audit procedures. Third one, the other matters affecting the limitation of an audit. Third one is the other matters affecting the limitation of an audit. And the fourth one is the timeliness of the financial reporting. Timeliness of the financial reporting and the balance between the benefit and the cost. The timeliness of financial reporting and the balance between the benefit and the cost. Right? So we have the 4 inherent limitations of an audit. What are the 4 inherent limitations of an audit? Nature of financial reporting, nature of audit procedures, other matters, and the timeliness. So NNOT. What is NNOT? Nature of financial reporting, nature of the audit procedures, the other matters affecting the limitation of an audit, and the timeliness of financial reporting and the balance between the benefit and the cost. Okay. Now, again, look over here, everyone. Right? Look at the chart. Now, what did I say? Which question I'm discussed with you right now? The inherent limitations of an audit. Now, one question which has come in the exam has come what? Inherent limitations of an audit. So, you have to write down all the 4 inherent limitations of an audit. Nature of financial reporting, nature of audit procedures, other matters, and the timeliness. What they have also done in these 4 times in this RTP, they've only asked the nature of audit procedures, why it is an inherent limitation of audit. So you only have to write down the second N. Then 2 times in the exam, what question have they asked? The other matters that affect the limitation of an audit. So then you only have to write down the other matters, right? One time what they have done in November 20 for 3 marks, timeliness of financial reporting and the balance between benefit and cost. So you only have to write down the T point over there. Right, so what I want to tell you over here, that one more style of ICAI asking question is that they could ask you a question at the wholesale level, or they could ask you a question at the retail level. You understand? If they ask me what are the inherent limitations of an audit, then NNOT. I need to write each of the inherent limitation and explain it. I need to write each of the inherent limitation and explain it. But if they ask me why nature of audit procedure is an inherent limitation of audit, or how timeliness of financial reporting is an inherent limitation of audit, then only that particular inherent limitation I need to write. Are you understanding that? Generally, life is very convenient when they ask a wholesale question. Because you know, wholesale question, I know all the 4 headings, and then each heading I will write 2-3 lines in front of it and my answer will be done. But now when they tell me nature of audit procedure, write for 4 marks. You understand, right? Inherent limitations of audit for 4 marks, understood. Right? Nature of audit procedure as an inherent limitation for audit 4 marks, dangerous. Now it is dangerous. Now you cannot, one sentence you can manage to write on your own, something which is wrong also. But 4 sentences, how you can write on your own, no, which are wrong? And even though if you write, will I say I give you marks? No, they will give you a big 0 over there. You understand? No, some papers, auditing papers I've checked, they have big zeros in their papers. Why big 0? Because there is no negative marking and the examiner is so frustrated looking at your paper. You understand? That's why they don't even want to give a small 0. They want to give a big 0 for your paper answer over there. Okay, anyways, what are the 2 styles of asking question? Wholesale question and the retail question, right? The wholesale question and the retail question. And coincidentally, see, life is so comfortable over here. Okay, coincidentally, what we need to remember that when the question is asked in retail, you should know the points in detail. Correct? Hannah? When the question is asked in retail, you should know the points in detail. Okay, so now whenever you study any question, you have to see how MCQ can be made out of this, how correct incorrect can be made out of this, what could be the wholesale question, what could be the retail question. If a retail question is asked, then what are the detail points I will write in my answer. Your mind should be programmed like that, you know, to think of all possible questions which could be created over there. Okay, right now I have given you one mnemonic. I'll be giving you many such mnemonics in the class. Okay, I'll be giving you many such mnemonics. So now first mnemonic which I gave you is what? NNOT. Right, so now whenever any mnemonic is given to you, there are 5 steps for that particular mnemonic as such. What is step 1? You have to remember, okay, when moment a question is asked regarding the inherent limitations of an audit, what has to come to your mind is NNOT. Right, is it right? Then second thing, what has to come to your mind? And this is again now where the drama starts. How the drama starts over here? You don't write anything in your books, only I will write. And you don't write anything in your books, only I will write. And they say, inherent limitation of audit, NNOT, NNOT, NNOT. They keep on singing. But they don't remember that N is for what, and that O is for what, and T is for what. So now, don't write, let only I will write, okay? You don't write. They write nature of entity. Nature of entity. Then they say negative opinion. Negative opinion. Then they say omission of a transaction. Omission of a transaction. And then they say TCWG because they heard new term. Now, whatever new term they use, no relevance anywhere, paste it. Just paste it. Just for the show off. I know TCWG, so show off. Disaster. Is this a disaster? Big disaster created. You don't write, okay? Please, I will delete this. Okay, right. So now you need to know, right? Okay, nature of financial reporting, nature of audit procedures, other matters and the timeliness of the financial reporting. Then, after a few attempts, no, after a few attempts, no, after a few studies, few revisions, you remember okay, N stands for nature of financial reporting. But now you don't know okay, why this nature of financial reporting is an inherent limitation. Like what is the justification which I need to write? Like how do I justify okay, nature of financial reporting is an inherent limitation? And you should be able to elaborate on that point. That is step number 3. Right, then step number 4 is what? You should be having the proper presentation. Some people, they write so dirty. Oh my God. See, I am not talking about your handwriting. Handwriting, nothing happened in the last 18 years, so nothing will happen now. Don't even expect for handwriting to go any better or don't even waste any energy. Whatever it is, just keep it. The rest of the life, use Microsoft Word and all the different fonts over there. Okay, but now, handwriting can't do anything about it. But at least presentation, can we be neat and tidy? Can we be organized in our paper? That can be done. Then some students say, ma'am, if I'm neat and tidy, if my presentation is good, then you should give me 6 hours to write the paper. No, I can't give you 6 hours to write the paper. You have to write the paper in 3 hours only. You understand? No. So what is the fifth requirement over there? That you should be having the proper time management. When all these factors go together, then you are able to write an answer. You understand? So when you study inherent limitations of an audit, you know first that it is NNOT, then the NNOT stands for what? Then each one you are able to explain. You have the good presentation of your paper and you also have the proper time management. Then you are on the pathway to success. Right? Then you are on the pathway to success. Are you understanding that? Okay. Right. So anyways, now let's come to the first inherent limitation of an audit, nature of financial reporting. Are you all with me? Right? So now, see, if you write something, you might forget about it. You write something and if you see it later, you might remember or something like that. But if you've understood something now, you cannot forget about it. If you've understood something what I'm talking about in the class, you cannot forget that. So please try to understand whatever I'm talking about right now. Okay, why is nature of financial reporting an inherent limitation of an audit? Are you all listening to me? Yes, don't talk to your friend. Yes. If you want me to take class till 8 in the evening also, absolutely no problem. But I don't want you to talk. I'm very particular about that. And don't allow me to blackmail you also if you don't stop talking. Yes, no talking in the class, not even a single student, not required. Pay attention. Let's give this time entirely for audit, finish it once and for all. It's again going to come in CA final also for 100 marks. Right, so right now let's deal with it first time. First time if you deal with it properly, second time the dealing would be more better. Okay, right. So now coming to nature of the financial reporting. Okay, two companies, give me an answer to this question. Two companies, asset, liability, income, expense. Two companies, asset, liability, income, expense being exactly the same. That this company has 3 buildings, this company also has 3 buildings. They have 20 revenues, they have 20 revenues, like that. Absolutely the same. Can they show different profits? Can they show different results?
Yes, ma'am.
Why? How? Management's efficiency? Policies? Yes. Performance? Why always think in terms of manipulation only? Genuinely, why it cannot be done? Only by manipulation they can show different profits? Why market situation?
The demand and supply might not be in the favor of the
No, but I'm saying asset, liability, income, expense is the same. Right. So anyways, what point I'm trying to say, few of you have mentioned that. Okay, all points being the same, but one company is following FIFO method, another is following the weighted average method. Can there be a different profit of the company? Yes. Are you understanding? Can the profits of the company be different? Yes. Right. So now one company, like classification of investments. What is classification of investments? Long-term investments and the current investments. Current investments which the company does not want to hold for more than 12 months, right? More than 12 months. And long-term investments which they want to hold for more than 12 months. Now one company says all our investments we want to sell in the next 12 months. So then all their investments are going to be the current investments, and current investments are to be valued at cost or NRV, whichever is lower. And another company says that all our investments we are not going to sell in next 12 months. So all investments are to be recorded as the long-term investments and they are to be recorded at the cost. Only permanent diminution in the value of investments is to be considered. Are you understanding? So though both may be having the same amount of investment, 100 crore, 100 crore, but still can the value of investments be different? Yes. Why? Because of the decision of the management. One management says we will sell it within 12 months. Another management says we will not sell it within 12 months. Are you understanding that? So, nature of financial reporting means that preparation of financial statements involves a lot of judgment of the management. Lot of management judgment is involved in the preparation of the financial statements. There is no single hard and fast rule regarding how financial statements of a company can be prepared. And like one company can use FIFO, another can use weighted average, one can classify as long term, another can classify as current investment. And are both right? Both are right. So there is not any one thing which is right. So preparation of financial statements involve a lot of Management judgment. That is why it is an inherent limitation of the audit. Okay, we are checking management judgment. We are not checking something which is like, final. Like only one thing is possible. It's not like that. It is a management judgment. So that itself is an inherent limitation of audit, that when management prepares the financial statement, there is lot of judgment of the management which is involved in the preparation of the financial statements. And as an auditor, what I have to do? I have to evaluate the management judgment. And judgment, it is a judgment. No, so it may be right, it may be wrong. Right? So can you give 100% assurance? No. Can you give absolute assurance? No. So that is why what you do, you give a reasonable assurance. Are you understanding that? Okay. Now, who is doing the audit? The auditor. On what is the auditor going to do the audit? The financial statements. Who has provided the financial statements to the auditor? The management. So I ask the management, please tell me how many bank accounts you have. Okay, and they told me, CA, we have 500 bank accounts. Now, actually, they have 700 bank accounts. But I asked them, how many bank accounts you have? And what did they say? That we have only the 500 bank accounts. So obviously, I will apply my audit procedures only on those 500 bank accounts. Are you understanding? So in terms of audit, what is the inherent limitation? That management may provide the incomplete information to the auditor. Management may provide the incomplete or the inaccurate information to the auditor. An auditor may end up doing the audit of the incomplete information. Because ultimately, see, I cannot go and get the financial statements on my own. Management has to give it to me. If what they give me is only wrong, then obviously I'll do the audit of the wrong things. That is an inherent limitation. Do you understand? Yes. So that we will, but then still, there is some litigation going on against the company. The management has not informed about litigation, you understand? Legal case, dispute. Okay, that they have not informed to the auditor. Now, there is some limitation in your audit procedure regarding where you cannot come to know. Like bank accounts also, I will try to find, but is there a possibility that I may not find out the 200 bank accounts? I may not find it. So that is an inherent limitation of the audit. Are you understanding that? Right? So what does it say? Management may provide the incomplete information to the auditor while when the auditor is doing the audit. Okay. Then as an auditor, what does it say? The possibility of not detecting a fraud is higher than that of not detecting an error. The possibility of auditor not detecting a fraud is higher than the possibility of auditor not detecting an error. In simple language, what I am saying, fraud is more difficult to detect than error. Why is fraud more difficult to detect? Because fraud involves, yes, it is intentional error. No, what does it say? Fraud involves sophisticated and carefully organized schemes designed to conceal it. Right? So if I come to the question regarding the inherent limitations of an audit, right? Inherent limitation. Have I discussed the first one with you? N, nature of financial reporting, preparation of financial statements involve judgment by the management. Second one, the nature of the audit procedures. There is a possibility that management may not provide intentionally or unintentionally the complete information that is relevant to the preparation and presentation of the financial statements or that has been requested by the auditor. Are you all with me? Right. Then second one, what does it say? Fraud may involve sophisticated and carefully organized schemes designed to conceal. Conceal means to hide it. Right? And then what does it say? Audit procedures used to gather audit evidence. So we need to perform audit procedures. What are the audit procedures? We will discuss in the next chapter. What is the next chapter? We have basic concepts in auditing. Right? Then used to gather audit evidence. Did I tell you what is the meaning of evidence today? Information. And audit procedures which are performed used to gather the evidence, the information may be ineffective for detecting an intentional misstatement that involves, for example, collusion to falsify the documentation, which may cause the auditor to believe that the audit evidence is valid or not. Like say as an example, if I show you this particular image over there, right? First thought which comes to your mind is that this is Bisleri. You understand? So when you go to a particular store and you happen to, what do you say, any railway station you are and you see some green color and something written on it, you think it is Bisleri and you purchase it. And then when you're drinking the water and you're so thirsty, so you just want to, have the water. Or later on when half of the bottle water was remaining and then you read the name carefully and then you saw Belseri, Bilseri, and then you saw Brisley. So now, prima facie for 1 minute what it looked like? Bisleri. You will be more surprised if I show you the next example over there. You understand? Like say Adidas. Confusing, now? See, if you are alert, if you are that alert, then you will be able to identify. Otherwise, so you will get carried away. And if somebody says this is original Adidas, you say, okay, original. Look at the best one, Starbucks. What is the difference in these two symbols? Anybody, can you identify? I think everything is same, no? One star is painted and one star is not painted. Otherwise, everything else is same. You understand? Domino's pizza. 1 and 2, and here 2 and 1. It's like identify the differences that type. KFC, that uncle. Here the stripes are on the left hand side and here the stripes are on the right hand side. You know Fast Track? You know Fast Track? So there are companies which sell First Track, Fun Track, Fast Track, then Fine Track, Full Track, First Track. Right, all these manipulations over there. Right, so anyways, the point which we are trying to bring in over here, right, like, so this is for Subway, they've made it Supreme. Okay, so many such examples could be there. Right, so what is it as an auditor that we need to check? That evidence which may be provided to the auditor may be ineffective for detecting an intentional misstatement. So intentionally, because they want that people who think that this is Bisleri and they should buy it. That is why they're doing the same, no? Or they could have given their own name, no? Aquafina has its own name, Kinley Water has its own name. But there are companies who want to show that we are Bisleri and they want to sell the product. Are you understanding that? Right, so what does it say? May be ineffective for detecting an intentional misstatement that involves collusion. What is collusion? Participation. What is collusion? Participation of the employees. Right, participation of the employees to do the fraud. Like what does it mean? You know, purchase manager. Do you understand purchase manager? The person who is making the purchases in the company, and then you have the accounts manager, right? So purchase manager will do the purchases and accounts manager will do the payment. Are you understanding that? Purchase manager will do the purchases and accounts manager will make the payments for the purchases. These roles have been given to two separate individuals. Purchases are done by Mr. A and payments are done by Mr. B. Are you understanding? Work is not done by one person. The work has been divided. There is division of work. And now there is the division of the work. Okay. Now what happens? Okay. If A has to make purchases of 10,000 rupees, but he made purchases of 12,000 rupees, when B is processing the payment, he will catch it. Or A, why? What payment 12,000? No, we had to make purchase only of 10,000. From where you got 12,000 wrong? You understand that? You know, it would have been detected by B because what was the amount of purchase to be made? 10,000. But how much was made? 12,000. But now, if say there is collusion, A and B create a racket, they join hands together. You know, there is collusion means what? There is participation. So they have a mutual understanding. Okay, no problem. Even though if we need to make purchase of 10,000, you make purchase of 12,000. I will make the payment of 12,000. Extra 2,000, 1,000 rupees you keep, 1,000 rupees I will keep. You understand? So have they done a collusion to falsify the documentation which is there to provide the audit evidence, which may cause the auditor to believe that that audit evidence is valid or not? And as an auditor, he is neither trained nor expected to be an expert in the authentication of the documents. Right? So as an auditor, you are not expected to be an expert in the authentication of documents. So in the nature of audit procedures, what is point number 1? Management may provide incomplete information. What is point number 2? Fraud involves sophisticated and the carefully organized schemes. For this fraud involves sophisticated and carefully organized schemes, there are a lot of correct and incorrect which have been asked. Right, there are a lot of correct and incorrect which have been asked. Okay, right, then what do we say? As an auditor, he is not an expert in the authentication of the documents. Then, as an auditor, when I go for doing the audit, right, can I, tell the company that, seize all your operations, seize your books of account, no changes can be done? No, that happens when there is an income tax department raid. You understand, when there is a search and seizure operation being conducted, when there is an investigation being conducted in the company. But as an auditor, statutory, you understand, law. An auditor appointed under law, an auditor who has to express an opinion on the true and fair view. As an auditor, do I have the power of search? As an auditor, income tax, do they have the authorities, do they have the power of search? Yes. As an auditor, when I am doing the audit, do I have the power of search? No. So again, as an auditor, he does not have the power of search. So audit is not an investigation into alleged wrongdoing. So in audit, am I doing an investigation? No. In audit, you are not doing an investigation. Why I am writing so many points over here? Because there is also a retail question which could come in the exam. And when question is asked in retail, I should know the points which are required to be written. Are you understanding? So I'm just summarizing these points over here. The main content is there in your books. It's there in your study material also. But this is how you'll remember the gist of it. Okay, management may provide the incomplete information. Then fraud involves sophisticated and carefully organized schemes, difficult to find. Then as an auditor, you're not an expert in the authentication of the documents. As an auditor, you do not have the power of the search. Yes, then as the audit is not an investigation into alleged wrongdoing, right? In an audit, what do? We give a reasonable assurance. The objective of audit is to obtain the reasonable assurance. Are you understanding? Audit is not an official investigation into the wrongdoing. Accordingly, it has not given specific legal powers such as the power of search, which may be necessary for an investigation. So we have to clearly understand that audit is distinct from investigation. Investigation, now this part has been asked as a separate question in the exam, right? So I'll just mark it as a retail question. Only this part, that audit is different from an investigation, right? What is audit? Do you remember the definition we discussed today? Audit is an independent examination of financial information to express an opinion. What is investigation? It is a critical examination for a special purpose. What is audit? Independent examination to express an opinion. What is investigation? Critical examination for a special purpose. And what is the special purpose? Or in investigation, in audit, what is the purpose? To express an opinion on true and fair view. In investigation, what is the special purpose? To detect a fraud. To detect a fraud. Okay. For example, a fraud is suspected and it is specifically called upon to check the accounts whether fraud really exists. It takes the character of the investigation. So investigation is a critical examination of the accounts for a special purpose, right? So audit is different from the investigation. Then what is the objective of audit? Objective of audit is to obtain the reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion, right? What is this? This is nothing but our overall objective of SA 200. Am I right? This is nothing but our overall objective of SA 200. Right, then as an auditor, are you supposed to be cautious or are you supposed to be suspicious? Yes, are you going to assume, oh, everything in this company is a fraud, every sales transaction of the company is a fraud, every purchase of the company is a fraud? Are you going to start with this preconceived notion? Are you going to start with this preconceived notion? No. So audit is never started with a preconceived notion about the state of affairs. Right? State of affairs, balance sheet, about the wrongdoing, about some wrong have been committed. Auditor seeks to report what he finds in the normal course of examination, and it is quite possible that sometimes investigation results from the prima facie findings of the auditor. Okay, what happened when auditor was doing audit, he found out something is wrong in purchases. And because auditor found out that something is wrong in purchases, that is why then they decided to do an investigation of the purchases. So what does it say? Sometimes it may so happen that audit findings may lead to an Investigation. That audit findings may lead to an investigation. It may happen that auditor has given some findings of serious concerns, and such findings may prompt for calling for an investigation. Right? It looks technical, but I think we can understand. I think we can understand, but you should think that you have understood. Thinking is not at all important. I'm reading it because see, we don't understand anything in your own language, first thing on earth. And own language, my understanding, my interpretation of things, no. In the institute paper, you have to write down this. You understand, no? I'm telling you so many of the important points on day one itself. Right? There are the 3 types of answers. What are the 3 types of answers? The right answer and the wrong answer. These 2 you might be knowing. And the right answer and the wrong answer. And the third one, which you have to write for clearing CA, is the ICAI answer. You understand? You say, ma'am, I have written everything. See, no, ma'am, whatever they are saying, I have just written in my own words. I have just written little different only, but it means the same. See, no, ma'am, you only read. Arey, you tell me to read. No use of you telling me to read. They are not going to accept it at all. You have to have the ICAI vocabulary. You have to use the terminology. See, instead of saying TCWG, I say the highest level of management. Am I wrong? Technically, am I wrong? No, because it means highest level of management is TCWG. But should I write in the paper highest level of management? No. In the paper, I have to write down TCWG. You understand the point over there, no? Right? So that is why we are looking, we are not roaming around, discussing general points. Examples, we can take 1 or 2 here and there. But finally, ultimately, we have to bottom down to the contents which are there in the study material. Okay, right? So nature of the audit procedures. So first and done, second and done. Is it right? Then other matters affecting the limitation of an audit. Coming to the O part over there. Right? Other matters affecting the limitation of an audit. Right? So now coming to the O part. Right? The other matters affecting the limitation of an audit. Right? So now, just as I already gave you the example, okay, what is more difficult to detect, fraud or error? Fraud is going to be more difficult to detect, right? So to detect certain material misstatements, right? Do you understand material misstatements? Right? Do you understand material misstatement, everyone? What is material misstatement? What is material misstatement? Material difference between what is and what should be, right? Material difference between what is and what should be. Okay, it says for some items of the financial statements, for few matters, it is more difficult to detect a material misstatement. For few matters, it is more difficult to detect a material misstatement. For which matters is it more difficult to detect a material misstatement? Are you understanding my wording? For some matters, it is more difficult to detect a material misstatement. For which matters, it is more difficult to detect a material misstatement? One, matters relating to fraud. Matters relating to the fraud. Like, you read in the newspaper that through imports, when a company is making imports, there is a lot of money laundering which is being done. You know money laundering? And not through the banking channels, and the transactions are being entered into. That you just read this in the newspaper somewhere. Okay? There is a lot of imports and lot of money laundering happening through the imports being made by a company. And you were doing the audit of a particular company, and you found out that as compared to the last year, this year the value of imports has gone high substantially. That last year imports made by the company 12 crore, this year imports made by the company 237 crore. And today morning only you read in the newspaper that nowadays lot of companies are doing fraud by, increasing the amount of their imports by doing money laundering activities. You just happened to read it. You were reading the newspaper in the morning, and then this company also which you were doing the audit, and there you come to know what you come to know over there. Okay, last year you saw how much? 2025, how much were the imports? 12 crore. And this year, 2026, how much are the imports? 237 crore. Are you understanding? Now, it's not going to be that evident as such, but I'm just giving you an example. Okay, will this be more difficult to detect when there is a fraud being done? Now, see, they've manipulated it under imports. They've manipulated it under the imports. Had I not been skeptical as an auditor, had I not checked why it has increased so much as compared to the previous year, I might not have detected it. So is it more difficult to detect matters relating to fraud? Matters relating to fraud, are they more difficult to detect? Yes, they are more difficult to detect. Okay. Now, generally, when you want to do a fraud, you will do a fraud with the help of your related parties. Generally, when you want to do a fraud, you will do a fraud with the help of your related parties. Okay. Right. Is related parties, you understand? Subsidiary. It's a related party. Key managerial personnel, they are related party. Okay. So what happened? No, you go to the company premises. And so whose audit you are doing? Growth Limited. But after going to the company office over there, you see Growth Limited, Joy Limited, Harmony Limited, you know what you say, Wonderful Limited, Blessed Limited, everybody's office is over there. Now you wonder that entire premises are owned by Growth Limited, and what this Joy and Harmony and Happiness and all these companies are doing over there, and are they taking some share of the expenditure of the company? No, entire expenditure has been borne by Growth Limited, but all this Joy, Happiness, Harmony and all of them, they are also using the premises. That means what? It's a related party transaction. That means it's a group company transaction which has not been reflected. So again, very difficult to detect. Only when you're skeptical, when you go for visiting the client, only when you make inquiries of the client, you come to know about the same. Right, so related parties. Then after that, you also talk about the non-compliance with the laws and regulations, very difficult to detect. Right, non-compliance with the laws and regulations. So what happened? You know, I'm telling you how you can identify, but basically these are difficult to identify. What happened, no, when you were passing through the company factory, very bad smell was coming from there. Right, so now your factory, you were going, and then you say, last year also I used to come for audit, but last year the smell was not this bad in the production process. This year the smell coming from the factory is very terrible. So then you start inquiring. Then you go to their sewage treatment plant and so, then how they are doing the processing of the waste and all. And then you come to know, oh my God, these fellows, they are not following the environmental laws. You understand? These fellows, they are not following the environmental laws, and it's leading to a lot of water pollution and all. Are you understanding? So non-compliance with the laws and regulations. Are you understanding? That matter is more difficult to detect. All these 4 points which I am going to write over here. What are these matters? These matters, it is more difficult to detect a material misstatement. And what is the last matter over there? The matter relating to the going concern. You understand? No, I meet the CEO of the company, and CEO says, you know, next 5 years our revenue is going to multiply 5 times. And our revenue is going to increase. We are going to have expansions for operations in 20 countries. And we are going to have operations. We are also going to get some angel investors. We are going to get some funding. We are also going to be acquired by another foreign company. So big stories he's telling you. And a big story the CEO of the company is telling you. What happened? No, you are a very social person. So you while coming, who are you? You are the auditor. Okay, you while coming in the morning to the client premises, you've gone for audit over there. Are you listening to me? Right, you going to the client premises for audit, you happen to, you know, park your vehicle, and then you are entering into the office, and then while entering into, you just happen to have a word with the security guard. Okay, and the security guard fellow, like every day you see him, so you recognize each other by face or something, and then you were just waiting and talking to him something and so. And then he thought, you know, generally if they find out that you are a good human being, they speak out their heart. You understand? He says, what to tell about this company? Last 3 months, they've not paid my salary. Auditor is like, what? Last 3 months, they have not paid you the salary? And yesterday CEO meeting, he was telling 5 times revenue of company in next 5 years. 20 countries we will expand the operation, funding and acquired by another company, and big story. And here look at this, if they don't have money to pay the salary of the security guard also, will it not certainly have an impact on the going concern assumption of the entity? Are you understanding that? Right, so it says these matters are very difficult to detect. Obviously, when are we able to identify these matters? When we are very smart in the audit. You understand? No, when we are very smart, when we are very cautious, alert in the audit, then we are able to identify these type of the misstatements. But generally, these type of misstatements are more difficult to detect. They are not impossible to detect, but they are difficult to detect. Okay, right, so just for reference purpose, right now it won't make sense to you, but just for reference purpose, next to fraud you can write down SA 240. You know SA? SA, standard on auditing. SA, standard on auditing, 240. Related parties, SA 550. Right, 550. Write down, right now you just write down. Right, non-compliance with law regulation, SA 250. Non-compliance with the laws and regulations, SA 250. And going concern, SA 570. Going concern, SA 570. Right, so fraud, related parties, non-compliance and going concern, 240, 550, 250 and 570. Right, so like if I want to create a loop over here, you understand loop? We try to link the points together. You understand loop? Okay, right, so other matter. What is the first other matter? Fraud. Generally a company will do fraud through related parties. Obviously if they are doing a fraud through related parties, that means they will do the non-compliance with the laws and regulations. And obviously if you do a non-compliance with law regulation, your license may be cancelled, and if your license may be cancelled, it may affect the going concern assumption of the entity. So like that you can make a web over there. This is for your understanding and for you to be able to remember. You understand the loop which we developed over there? Okay, there is a fraud. Fraud is done through related parties. Then what does it say? How the fraud is done? By non-complying with the laws and regulations, and which may affect the going concern assumption of the entity. Is it clear to all of you? That is the third inherent limitation of an audit. The other matters affecting the limitation of an audit. In case of certain assertions or subject matters, that is for some items. Right now you may not be knowing what is assertion, so take it as items. For certain items of the financial statement, the potential effect of the limitations on the auditor's ability to detect material misstatement are particularly significant. That means it is more difficult to detect. And what are such items? Fraud, right? Related party relationships and transaction, laws and regulations, and continuing as a going concern. Is it clear to all of you? The other matters affecting the limitation of an audit, right? And then after that we have the last T over there, the timeliness of financial reporting and the balance between the benefit and the cost. Are you understanding that? Timeliness, okay, right. So say we are doing the audit for the year ended 31st March 2025. Okay, say the date of the board meeting. You understand board meeting, everybody? Right, where the financial statements are going to be approved by the management, and then auditor is going to sign the audit report, and then the results of the company will be declared on the stock exchanges. Are you understanding? I'm just taking an example of a listed entity. Okay, so say now the date of the board meeting of the company is 25th of April 2025. Okay, so now 365 days, and 1st April 2024 to 31st March 2025. This 365 days ka audit you have to finish in 25 days. 1st April, say you will start with the audit, and then by 25th April you have to issue the audit report. Means first 1 or 2 days forget, last 1 or 2 days forget. So in between you only get as such 20 days to do audit. So in 20 days you have to do the audit of 365 days. Are you understanding that? Why you are getting 150 from? Okay. Yes, okay, right. So what are we talking about over here is the time. Yes, now, auditor says, no, I can do full proper checking if you give me 6 months time. What is auditor saying? If you give me 6 months time, then I will do full checking and give you the report. Okay, so 6 months time means April, May, June, July, August, September, and then auditor says 25th October I will give you the report. No, who on earth will be interested in your 31st March ka report on 25th of October 2024? You understand? No. After your results come, for 1 or 2 days you switch off your phone. You don't switch off your phone after 6 months. Is it right? No? You say, ma'am, I don't even switch off after that. Anyways, right. So now, what does it say? Okay, the value of information, the value of the information tends to diminish over time. What information is you are interested to know, what are the results of the company for this year, 31st March. You're more curious to know about it in the month of April or May as compared to when you come to know about it in the month of October or September. Originally when Ukraine-Russia war started, you were interested to know, okay, what is happening, what is the problem. Now you know, okay, it is years that the war is going on. Now you're no longer interested in knowing because you know they are not stopping. Like generally, a war goes on for certain amount of time, like India-Pakistan wars have been happening or whatever. It goes on for a particular time and it comes to an end. Here it is the anniversary also done of the war happening over there. It's already 1 year completed over there of the war. Right? So anyways, what I'm trying to tell you over here, okay, the value of information diminishes over it. You understand? Diminishes, reduces over a period of time. Right? So as an auditor, you have to issue your audit report within a limited time frame. Right? So there has to be the timeliness of the financial reporting. There has to be the timeliness of the financial reporting. Okay. Right? So otherwise the value of information tends to diminish. And second, now say you're doing the audit of Reliance Industries, their turnover is 4 lakh crore. Okay. And now your audit fee is, say, example, 25 crore. Right, say your audit fee is 25 crore. Okay, and now to do this audit, just to keep the example very, very simple. I'm just keeping the example too simple over here. Just to keep the example simple, for doing audit of Reliance Industries, you have put 10 chartered accountants of your firm, and each of the chartered accountants, say you are paying them 3 crore. Example, just to keep the example very simple. Okay, so now 30 crore you are paying to get the audit done of Reliance Industries Limited. And how much is your audit fee? 25 crore. And how much expenditure are you incurring? 30 crore. No. Is there a balance between the benefit and the cost? No, there is no balance between the benefit and the cost. What happened? Your first year article. First year article, you can write a story regarding your experiences as a first year article. You understand regarding what all happens and what all experiences and realizations you have in life when you start with your first year of articleship, and how you groom and change as an individual by the time you reach the last year of your articleship and by the time you start preparing for your CA final exams or so. Okay, right. So anyways, what happens is first year article, they have told him that the company has 700 bank accounts. I told you, first year article, they give him that area for checking. And they said that some bank accounts, they have received 2 rupees interest, 3 rupees interest, very small balances, 20 rupees interest, 80 rupees interest, 73 rupees interest or something. And they are telling this first year article, check all these interest calculations. And this first year article, now morning 9 o'clock he started till evening 8 o'clock, he is checking this particular interest calculation. Full day of article went in checking that. And what was the total amount of all the interest put together? 1800 rupees. All the interest put together. And 2 rupee, 3 rupee, this rupee, that rupee, all interest put together. How much was the amount? 1800 rupees. Did it make sense for you to get that checked? 1 or 2 you should have checked on sample basis and finished it, no? You understand? So there has to be a balance between the benefit and the cost. Okay, how much cost I am incurring? What is the benefit that I am getting out of that? Auditor, you need to keep a rational relationship between the two. Okay, so now it says, you say, no, it is taking too much time. That is why I am not doing this procedure. Yes, so somebody asks you, okay, auditor, have you checked interest calculations? Auditor says, no, I have not done any checking of interest calculation. So now, the limitation is not to be used as an excuse. The limitation is a limitation, but it should not be used as an excuse. Okay, why you did not perform the audit procedure? No, because it was taking too much of cost, because that much of benefit was not there. No. So the limitation should not be used as an excuse. Are you understanding? So what you should do, given the resources, given the time which you have for doing the audit, given the resources, given the time which you have for the audit, you should do the appropriate planning so that you end up doing an efficient, effective audit. Are you understanding that? Limitation. It is a limitation. It is not an excuse. Okay, so matter of difficulty, time or cost involved is not in itself a valid basis for the auditor to omit an audit procedure. Right, so you say, why you are not checking the interest? because it's very difficult, or because I don't have time, or too much of cost is involved. Is that a valid basis for omitting an audit procedure? No, it is not a valid basis for omitting an audit procedure. And appropriate planning. So what you should do? Appropriate planning assists in making sufficient time and resources available for the conduct of the audit. And notwithstanding this, relevance of information and its value tends to diminish over time, reduce over time, and there is a balance to be struck between the reliability of the information and its cost. There is a balance to be struck between the reliability of the information and its cost. Are you able to follow this, everyone? Right? Nature of financial reporting, nature of audit procedures, other matters, and the timeliness of financial reporting, and the balance between the benefit and the cost. Clear to all of you? Right? Yes. That's what I already gave an example. Okay, if 31st March results are declared on 25th of October, who would be interested in such a later point of time? Okay, right? So timeliness of financial reporting. What does it say? There has to be a balance between the benefit and the cost. The balance between benefit and cost. For that you need to do the appropriate planning, right? So you need to do the appropriate planning, and the value of information tends to diminish over time, right? The value of the information tends to diminish over the time. So these are the important points which you need to keep in your mind. Right? These are the important points you need to keep in your mind. So now see, when I have to revise inherent limitations of an audit, obviously I have the study material or the notes with me. But I know inherent limitations of audit, NNOT. Why? Nature of financial reporting, because management judgment is involved. Nature of audit procedure, management may give incomplete information. Then there might fraud which involves sophisticated and carefully organized scheme. Auditor is not an expert in authentication of document. Auditor does not have the power of search. Audit is not an investigation into alleged wrongdoing. Yes, then after that you have the other matters, 240, 550, 250 and the 570. And then after that the timeliness of financial reporting and the balance between the benefit and the cost. Okay, right, let us make life more interesting. I just want you to be on the right track for the study of the subject, right? I want you to be on the right track for the study of the subject, so that you know regarding what type of questions are coming in the exam. Okay, now the preparation. Yes, please listen to me. Right, there are inherent limitations of an audit which result in most of the evidence on which the auditor draws conclusion and bases the auditor's opinion being conclusive rather than persuasive. Most of the evidence being persuasive rather than conclusive. So this statement is incorrect, and then you have to write down as per SA 200. The auditor is not expected to and cannot reduce audit risk to zero. We'll come to that. And cannot therefore obtain the absolute assurance that financial statements are free from material misstatement, whether due to fraud or error. This is because there are the inherent limitations of an audit which result in most of the evidence on which the auditor draws conclusion and bases the audit opinion being persuasive rather than conclusive. Then preparation of financial statements involves judgment by the management. What is this? The statement is correct, but what does it? The first inherent limitation of an audit, the preparation nature of financial reporting. You understand? They have asked a correct incorrect question on that one. The preparation of financial statements involves judgment by the management. Then, audit procedures used to gather audit evidence may be effective for detecting an intentional misstatement. It may be ineffective for detecting an intentional misstatement. So again, NNOT, the second N, nature of audit procedures. Fraud involves sophisticated and carefully organized schemes designed to conceal it. Therefore, audit procedures used to gather evidence may be ineffective for detecting an intentional misstatement. You remember that same sentence we had studied over there. Then, an audit is not, an audit is an official investigation into alleged wrongdoing. No, it is not an investigation into alleged wrongdoing. So again, accordingly, auditor is not given the specific legal powers such as the power of search, which may be necessary as such for an investigation. Then, the matter of difficulty, time or cost involved is in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative. No, what did we say? It is not a valid basis for the auditor to omit an audit procedure for which there is no alternative. So again, N-N-O-T, the T. Are you understanding? Appropriate planning assists the auditor in making sufficient time and resources available for the conduct of audit. And notwithstanding this, the relevance of information and thereby its value tends to diminish over time, and balance has to be struck between the reliability of information and its cost. Are you able to identify? We just discussed inherent limitations of audit, but one, we saw wholesale question coming on that, right? Then we saw the retail questions on that. Then we saw from that only they've created so many of the correct incorrect also, right? So many of the correct incorrect have also been created out of that only. Is it clear to all of you? One concept which we have discussed, inherent limitations of an audit, right? So, and you look at this particular book, you know, what we have done, we've, all the particular correct, incorrect or whatever are related to one topic, they've been combined together. And they've been kept at one place. Like if I come to the beginning, the basic objective of audit does not change with reference to nature, size or form of an entity. The basic objective of audit. So is it because I'm doing audit of 1 crore company, I will say true and fair, and because it's 4 lakh crore, I will not say true and fair? No, basic objective of audit remains the same. Whether I'm doing the audit of a firm or whether I'm doing the audit of a company, does my objective of audit remain same? Yes, so audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. So expression of opinion does not change with reference to the nature or size or form of an entity. So on what have they made the correct incorrect over here? On the definition of audit. What have they made the correct in? Array, don't talk to your friend. Not required. I want you to enjoy the subject of audit, and you better enjoy it. And better you understand what is over here. Why you want to, you're sitting in the class also, then later on also study. Pay attention, no, right now? What is it that you're talking to your friend? See, I am telling you on day one only, I'm making everything so clear to you. You know, right now, don't speak anything. I'm telling you, no, morning 7 o'clock, how much energy you're wasting. Right now, you don't speak anything. Then you say, ma'am, what should I do if I don't speak? I'm giving you a better option. Let your results speak. Let your results speak. That will be enough. On the day of result, if you show me the 50, 50, 50, 50, 50, 50, 50, 50, 400 out of 800, nothing. You don't have to tell me anything after that. If I get 600 out of 800, 650 out of 800, very good. Like, what can happen? I can get 900 out of 800 also. Who wants less? You understand, no? So, no problem. Problem starts with 399. You understand, no? So, just maintain some sort of a discipline. You are into a chartered accountancy course. You understand? Don't assume the way you cleared foundation exams, same way you'll be able to clear intermediate exams. I'm not scaring you, but I'm just telling you the fact check. It's just being, and just a few students, like, doesn't matter. Like, it's not that there's a lot of filtration which happens in the CA course. Like when the CA foundation, 1,000 students register. Then foundation result is how much? Say 25 or 30%. So out of that, 300 students cleared. Then those 300 students, they apply, write the inter exams. Now inter also, out of 300, 200 students will write group 1 and group 2 together. Other students, 100 students, they will write group 1 in May and group 2 in November, something like that. Then out of those, say 200, all the 300 students over there, again let me say 20% result. Just an example I'm giving over there, say 20% result. So then that comes to 60 over there. Then these 60 out of that, now they will prepare to articleship, start with articleship and then go through the CA final, prepare for the 8 exams, 8 papers over there along with articleship and all of that. So it takes a lot of perseverance to reach through all of this. And then those 60 students say they write the CA final exam. Many don't reach only till there, say only 50 reach up to there. And in that 50, again say there is 20% result. I'm just taking an example over there. Right? So again, only 10 become the chartered accountants over there. So how many started? 1,000 people started. And now, what you are doing? I'm doing CA. How you tell everybody? What you're doing, what your son is doing, what your daughter is doing, she's doing CA. And right now telling to everybody, doing CA. Array, but now 1,000 are doing CA. How many will be CA? Only 10. Do you want to be in the 10 or 990? You understand, no? You have to be. You have no option. You are KS Academy students. You understand that, no? You have to be in the 10. You have no other option with you left over there. Okay. Right. So anyways, let's come to the point over there. The basic objective of audit. Then subjective examination. Array, as an auditor, can I be subjective in my examination? No, I have to be objective. So it says objective examination connotes critical examination and scrutiny of the accounts undertaken with a view to assist how far the statement presents the state of affairs in the correct context and give a true and fair view about the financial results and the state of affairs. Do you understand? Financial results means statement of profit and loss, and state of affairs means the balance sheet. The objective of audit is to obtain absolute assurance and to report on financial statements. No. Objective of audit is to obtain the reasonable assurance that financial statements are free from material misstatement. Objective of audit is to obtain absolute assurance about the financial statements are free from material misstatement. No. Objective of audit is to obtain the reasonable assurance, which is a high level but not an absolute assurance. Are you understanding? Auditor conducting an audit in accordance with the essays is responsible for obtaining absolute assurance that the financial statements are free from material misstatement. No, for obtaining the reasonable assurance that financial statements are free from material misstatement. As per Essay 200, in conducting an audit, the overall objective of the auditor is to obtain the absolute assurance about whether the financial statements as a whole are free from material misstatement. No, it is to obtain the reasonable assurance. Then the auditor is not expected and cannot be reduced auditors to zero. This one we are yet to come. But again, what does it say? Cannot obtain the absolute assurance because there are the inherent limitations of an audit. Evidence being persuasive rather than conclusive in nature. Then again, what does it say? Absolute assurance? No, you cannot obtain the absolute assurance. Reasonable assurance is an absolute level of assurance? No, it is a high level but not an absolute assurance. Right? So all similar questions relating to reasonable assurance, absolute assurance. So I told you, like the gulab jamuns I told you today, you'll be tired of it. Like how many should I eat? How many times absolute assurance? How many times reasonable assurance is coming over there? And to your heart's content, you will have the discussion over there. And the more the repetitions, the more the concepts it fits properly into your head over there. Is it clear to all of you? Okay, right. So what have we discussed so far? We have discussed the overall objectives of the independent auditor, and then after that we've also discussed the inherent limitations of an audit. Now we come to the next question over there, which is regarding the advantages of the audit of the financial statement. Are you all with me? Advantages of the audit of the financial statements. Okay. Right. So now, if company has financial statements, okay, balance sheet, profit and loss, cash flow notes, and balance sheet, profit and loss, cash flow, statement of changes in equity, and the notes. And if I say these are audited financial statements, then what will happen? On the top, there will be the very good independent auditor's report, then balance sheet, then profit and loss, then cash flow statement, statement of changes in equity, and the notes. Do you understand the difference between financial statements and audited financial statements? On top of the Reliance industry, today we saw the financial statements, but before the balance sheet, what was there? Independent auditor's report. What is IAR that I have written over here? It is the independent auditor's report. It is the independent auditor's report. Are you understanding that? Okay, right. So now, say Growth Limited, did they want a loan from the bank? Growth Limited, did they want a loan from the bank? Yes, and that is why did they prepare their financial statement showing a profit of 700 crore? Did they prepare their financial statement showing a profit of 700 crore? And they went to the bank in order to get the loan. But what bank said? No, you please get them audited from a chartered accountant and independent examination. And then auditor said, oh no, they don't have a profit of 700 crore. They have a loss of the 1200 crore or 2000 crore, whatever is the amount over there. Okay, so now first question which I would like to ask all of you, we will come to audited financial statements later. Are you listening to me? And we will come to audited financial statements later. First you tell me, okay, why does a company prepare financial statements? Or you tell me, okay, who are the users of these financial statements? Who is going to use? Why they prepare? They have no other work. Sitting and preparing balance sheet and profit and loss and cash flow and statement of changes in equity and notes to account. Why? Who is going to use it? Who are the users of financial statements? Yes, the shareholders. Why? Because there is a difference in the owners and the runners of the company. Shareholders are the owners of the company, whereas the runners or the managers of the company are the board of directors, the management, the TCWG. Right? So the management, the shareholders are not involved in the day-to-day operations of the entity. But how they will come to know whether they are getting the right value for their money, they will come to know on the basis of the financial statements. Okay. Who else can make use of the financial statements? Creditors. What creditors? How it will help them? To decide whether I should give this company the goods on credit or no, and the company is not clearing the dues, but I ask them, you have so much of money with you, then why you are not paying the dues? Okay, who else? Yes, bank. Bank can give the loan again on the basis of the financial statements. Okay. Investors, you will decide to purchase the share of a particular company only after studying their financial statements. Okay. Government will charge taxes only on the basis of the on the basis of the profit which is shown in the financial statements. Or government will give you a subsidy only on the basis of your financial statements. Or government will give you a license for a particular trade again on the basis of your financial statements. Are you understanding that? Yes, if you are a loss-making company, you can get a subsidy from the government. If you are a profit-making company, you'll have to pay the tax to the government. And how that is determined? Based on your financial statements. Who else? Is employees of the company. How the employees of the company can make use of the financial statements? Yeah, whether they will get any bonus. Employees are asking last 2 years, no increase in salary, no bonus received. Management is saying, employees, you don't know our company is not doing well. He says, what not doing well? So much of profits in the company, 40,000 crore profit, and you are telling that not doing well. Right? So employees can demand for higher wages on the basis of the financial statements. Okay, who else are the financial statisticians?
For making, ensuring that the profit on a consistent basis, the average profit they need from
So financial analysts, let me call it that way, the financial analysts, they can analyze the performance. So it's financial analysts are nobody but your investors over there. You understand? No, financial analysts are nothing but your investors over there. Okay, who else? Public. Yes, the general public. Okay, so the public at large, even they could be the users of the financial statements. Okay. The regulators, the stock exchanges, even they could be the users of the financial statements. SEBI, somebody said. Okay. Regulatory authorities, I've just written that, regulatories. Okay. Right, the customers of the company. Right, the customers of the company, whether I should enter into a contract with this company, whether I should purchase goods from this company. Again, for that, I will first study the financial statements of that particular company. Right, so this is a non-technical discussion which I had with you right now. Okay, what are the what are the users of financial statements? And obviously, say company prepared these financial statements and gave them to the creditors or the customers or the bank or to the government or to the shareholder or to the investor. Are these financial statements going to be reliable to these people? No, they are going to be reliable only when on top of these financial statements there is an audit report. When there is an audit report. Are you understanding that? So that is why now we are going to talk about the advantages of audit of the financial statements. Advantages of the audit. So it is nothing but the advantages of the audited financial statements. Can I say it that way? Advantages of the audit of financial statements is equal to advantages of advantages of making of financial statements. So financial statements, who all are the users of the financial statements? And the users of the financial statement. Based on that, so just as financial statements, now we are talking about advantages of audited financial statements. That is nothing but your advantages of the audit of financial statements. Right, so now Reliance Industries, we saw their report today, we saw their profit and loss account over here. And what did their profit and loss account show over here? Okay, how much profit do they have for the year? 39,000 crore. Right, shareholders, right? To whom is the report addressed to? It is addressed to the shareholders of the company, to the members, and shareholders of Reliance Industries Limited. Opinion, and this is the opinion given by the auditor. And what you see in their profit and loss account, that they have a profit of 39,000 crore. Right? Do you think the shareholders could rely on this amount had there not been an audit report? Could the shareholders have relied on this amount had there not been an audit report? No. But now the shareholders, can they rely on this particular information over here? Yes, because they know that auditor has issued an audit report. Auditor has expressed an opinion saying true and fair view. Right? So one advantage of audit of financial statements is what? It ensures the reliability of the financial statements. Are you understanding that? It ensures the reliability of the financial statements. Then I am a shareholder of the company. That means to some extent I am an owner of the company. I am handing over my money to the management to run the company, to run the organization. So my money should be in safe hands. I should see whether my money is being properly utilized or whether my money is not being properly utilized. So what does audit also help in? It helps in safeguarding the financial interest. It safeguards the financial interest. Are you understanding that? It safeguards the financial interest. It safeguards the financial interest. Okay. Right. Then after that, now it is again dinosaur, but not dinosaur, not sure, okay, but whatever. Like, at some places when you had to enter, you had to compulsorily wear a mask. Okay, so if you don't wear the mask, then you were not allowed entry over there. So then what you used to do, keep a mask in your pocket, and then when you're entering over there, wear the mask and only then enter, and then inside once you go, then you remove the mask or something like that. But did you ensure that you wear the mask, that you have a mask with you? Because without that you won't be allowed the entry. Like, in some colleges, for the students, the helmet is compulsory. Right? So, and then there is a parking lot which is there in the campus. Okay, and in that parking, the parking is a contract is given to a particular parking agency, and those parking agency people are sitting over there, and those people under their table they have 20-30 helmets over there. Okay, so now when you're coming with your friend on the bike, they don't allow entry into the college without the helmet. So now when you're coming with your friend on their bike, your friend gets down from the bike before you enter, goes quickly running to the parking, pays 5 rupees to that fellow over there, picks up an helmet from there, comes and puts it on your head, then you sit down sit on the bike again, you go down, then again at the entry you give the helmet over there, and then you enter into over there. It's now, this is your head. You should be worried about your head. Why should others worry about your head? You understand? No. But what I'm trying to say over here, are they ensuring that, mask is being worn or that helmet is being worn or so? Otherwise, somebody is doing the checking. If they say nobody is doing the checking, nobody is going to check, then will they ensure this much of compliance also? Will they ensure this much of compliance also? No. So very important, getting an audit done is a moral check on the employees. Getting an audit done is a moral check on the employees. And our employees think 10 times. Before doing a fraud, they say, today though I will enjoy the fruit of the fraud, but tomorrow that auditor will come and left, right, center, he will ask questions, and then management will come to know about my fraud, and then the job will go. No, very scared of the auditor. Are you understanding? So you have, if there is somebody senior in your house, your mother is going to ask you or your father is going to ask you, why are you late today? You have somebody who is asking you, or you come at 1 o'clock in the night also, 2 o'clock in the night also, nobody tells you anything, you are okay, you get up at 11 o'clock in the morning, nobody is telling you anything, you will become the worst citizen of the country. You understand that? No. But when you know, okay, no, if I said that I will come at 10, but I am going to be late by half an hour. I call up at home and say that I was going to come at 10, but I am caught in some work or there is traffic over here, so I will reach half an hour late. So that means there is some check on you, no? There is some responsibility which is there on you, right? So it's a moral check on the employees, that the accounts of the company will be checked by a chartered accountant. So it will deter them. Deter them means stop them from doing a fraud. When you know that there is a audit which is going to be taking place, that itself will stop the employees from doing a fraud. Are you understanding that? Okay. Then after that, because they know auditor is going to come and do the audit, they will maintain the up-to-date books of account. It is a moral check on employees, and also employees will maintain the up-to-date books of account. Otherwise, they'll say, oh, what they will do? Month of April 2024, they will pass the entry in April 24 entry, they pass in February 25. Because they say nobody is going to check. No, but they announce, no, okay, auditor is going to check. So we have to maintain the up-to-date books of account, adequate books of account, proper records and documentation are required to be maintained. Right? Proper records and documentations are required to be maintained. Then you know, when auditor was doing audit of printing and stationery, are you listening to me? When auditor was doing the audit of printing and stationery expenses, he found out that this company, it has some 200 employees, just example, and every month they are purchasing 1,000 highlighters. You know highlighters, pen, those neon color, yeah, the green color, pink color, those highlighters. As an auditor, you're wondering, okay, what are they highlighting? Are they highlighting the walls or what? Like 1,000 highlighters purchased every month. Or are they taking it home for their children? Like, what are they doing? How many 200 employees in the company? 10, 20 highlighters, I think even 200 highlighters for the entire year is also more than enough. Every month they are purchasing 1,000 highlighters. Auditor says, what is happening in this company? So it helps in the detection of the wastages and the losses. It helps in the detection of the wastages and the losses. Are you able to follow that? Right. Then you are also able to do the review of the operations. You are also able to do the review of the operations. That whether, like, you know, attendance. Attendance register of the employees. Every morning when the employee comes to office, there is a fingerprint reader over there through which he has to mark his attendance. And what you see, that none of the employees are marking their attendance. So what you do when you're doing the audit, you're also checking the review of the operations. So that is an advantage of audit. Is it clear to everybody? After each point which I discuss with you, what you need to remember, what is the heading that I am talking about? Advantages of the audit of the financial statements, right? Advantages of the audit. So wastages and losses and the review of operations. Then it is also helpful for the settlement of the accounts, right? Partnership accounts. Have you done partnership problem? Admission of a partner, retirement of a partner, death of the partner, dissolution of the firm. So again, settlement of accounts can be done on the basis of the audited accounts, right? Audited accounts. Say there is a dormant partner, sleeping partner. How will he come to know whether he is getting a correct share of the profits of the company? He can come to know on the basis of the audited accounts, right? So settlement of accounts, and also settlement of trade disputes. Say the trade union of the company has gone on a strike, that please increase our salary, please increase our salary. And company is saying, no, we will not increase the salary. What will the trade union say? No, that see, the profits of the company are increasing, you have to increase our salary. So it will help in the settlement of the trade disputes. So settlement of accounts and also settlement of the trade disputes. Then it will also help you to calculate your taxes. It will also help the bank in deciding whether to give you a loan. It will also help to determine the purchase consideration of the business, right? Purchase consideration of the business, in case if you want to sell your business, like, you know, Byju's acquired Akash Institute for 7,000 crore rupees, right? So now that 7,000 crore rupees is a purchase consideration, Right? So on the what basis this purchase consideration is determined? Again on the basis of the financial statements, and obviously those financial statements would be the audited financial statements, and also it helps in determining whether you should receive the government support, right? The government support. Right? Government support like subsidy or license or any particular assistance from the government. Are you understanding? It can also be helpful for settlement of the insurance claims. In settlement, I can add one more point. Right? Settlement of the insurance claims. Like say in the company has a 200 crore inventory and a fire occurred in the company go down, and say 20 crore inventory got burnt. Okay, but now how you prove what inventory got burnt is of 20 crore? So again, you show the inventory register. You show the value of inventory as per the financial statements, the audited financial statements. So settlement of the insurance claim, settlement of accounts, settlement of trade disputes, all this can be done on the basis of the audited financial statements, right? So what are these? These are the advantages of the audit of the financial statements. How many points are there? 2 points, 2 points, 2 points, 2 and 2. The settlement of insurance claim, I gave you a complimentary point over there. You understand? But as such, we have 2 points over there. What are the points for advantages of audit? Everybody, please tell with me. Reliability of financial statements safeguards financial interest. First set. Second set, moral check on employees, books of account. Third set, wastages and losses, review of operations. Fourth set, settlement of accounts, settlement of trade disputes, and I also told you settlement of the insurance claim. And the last set, taxes and loans and purchase consideration of the business, and also the government support, right? And also the government support. What are these? These are the advantages of the audit of the financial statements. So one question I discussed with you was what? Inherent limitations of an audit. Another question I discussed with you is the advantages of the audit of the financial statements. Okay. What is the overall, the title of SA 200? Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Do you know the overall objective of the independent auditor? Do you know the overall objectives of the independent auditor? Yes. And now what does it say? That CA, auditor, chartered accountant, whenever you have to achieve this overall objective, auditor, whenever you have to achieve this overall objective, you need to comply with certain ethical requirements, including independence. Auditor, you need to comply with certain ethical requirements, including the independence. Right, so this is one of the requirement of SA 200. What is the requirement? Okay, when you have to achieve the overall objective, you need to comply with the ethical requirements, including the independence. Right, what do you mean by ethical? What do you mean by ethics? Ethics, what do you mean by ethics? Moral values, right? Belief system, moral values, that is what you mean by ethics. So now here, in CA final, in intermediate, what is the name of the subject of audit? Auditing and assurance. In CA final, what is the name of the subject? Advanced auditing and professional ethics. Right, you have advanced auditing and the professional ethics over there. So we have the ethics which are associated with the profession. Every profession, does it have the ethics? Like doctor's profession, does it have ethics? Right, doctor's profession, do they have the ethics that without reason they should not, give the medicines, or should not hospitalize the patient or something like that, or they should give the correct information, correct treatment to the patient, right? They should try their best to save the life of the patient. That is the ethics for the doctor. Are you understanding that? Okay. Similarly, we also have the ethics for a chartered accountant. That is the moral values. It's the fundamental. It's the core of audit. Why there is so much of reliance on the audit report? Why there is so much of value? Okay, auditor has said true and fair. You are, like just blindly trusting that Reliance Industries has 39,000 crore profit. Why? Because CA has signed. Because CA has issued an audit report. That much of trust is there on the audit report of the CA. Are you understanding that? So on what basis does this trust come? From where does this trust come? It comes because they know that the auditor has complied with certain ethical requirements, including the independence. Right? What are the ethical requirements? It says ethical requirements, those being integrity. Right? So what is the first ethical requirement for a chartered accountant? That he should be a person of the integrity. Second ethical requirement for a chartered accountant is that he should maintain the objectivity. Third ethical requirement for a chartered accountant is he should maintain the professional competence and exercise the due care. So professional competence and due care. Fourth one, he should maintain, chartered accountant, auditor, you need to comply with the ethical requirement of confidentiality. And last ethical requirement, you need to maintain the professional behavior. You need to have the professional behavior. What are these? These are the ethical requirements. These ethical requirements can also be referred to as the fundamental principles which are to be followed by a chartered accountant. Yes, again a favorite question of ICAI, ethical requirements. Right? What are the fundamental principles? What are the ethical requirements? Integrity. Yes, are you all with me? Yes, integrity, objectivity, PCDC. What is PCDC? Professional competence and due care, confidentiality, and the professional behavior. What are the ethical requirements for a chartered accountant? Integrity, objectivity, professional competence and due care, confidentiality, and the professional behavior. Are you understanding? What are these? These are the ethical requirements. What are the ethical requirements? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Okay, like say this company, how much, Growth Limited, what did I say? How much their financial statements are showing a profit of 700 crore. Are you understanding that? CA comes for doing the checking, and what CA says, what you are saying, profit of 700 crore, not right, you have a loss of 1200 crore. You have a loss of 1200 crore. Then management says, auditor, what you are doing like this? Why you want to tell everybody that we have a loss of 1200 crore? If we show the loss of 1200 crore, no bank will give us the loan. So you know what you do. Your audit fee, how much it is right now? 25 lakh. Next year I'll make your audit fee 1 crore. But you please sign this true and fair as for 700 crore profit. They say we'll increase your audit fee 4 times. Instead of 25 lakh, next year I'll make your audit fee 1 crore rupees. You understand? But the auditor is seeing it. Okay? Actual result of the company is what? There is a loss of 1200 crore. But he's succumbing to the pressure of the management. He's giving up to the pressure of the management. And what he's saying, okay, instead of 25 lakh, I'll make 1 crore rupees. So it is okay. I will give an audit report saying financial statements of Growth Limited give a true and fair view. Is there any integrity of the chartered accountant in this case? Absolutely no integrity of the chartered accountant. When is a person, auditor says you give me 10 crore rupees also, I will not give an opinion saying true and fair. What you're talking about 1 crore, you give me 10 crore also, I will not say true and fair. That means what? The auditor needs to be straightforward, honest, and sincere in providing his professional services, right? Straightforward, honest, and sincere. So we are talking about SA 200, in which we are talking about the ethical requirements, including the independence, also called as the fundamental principles. What is ethics? Ethics are the principles of conduct governing an individual or a group. Professions like law, medicine also have their code of ethics. So auditing profession is no exception. The auditor shall comply with the relevant ethical requirements, including those pertaining to the independence relating to the financial statement audit engagements. Is everybody able to follow these sentences? Yes, do they make sense to all of you? Okay, right. Relevant ethical requirements ordinarily comprise the Code of Ethics for Professional Accountants issued by the IESBA. Who is IESBA? The International Ethical Standard Board Authority. Right, the International Ethical Standard Board, right, relating to an audit of financial statements. And what are these fundamental principles? Integrity, objectivity, professional competence, and the due care, confidentiality, and the professional behavior. Are you understanding that? What is the first one? Integrity. Integrity requires the auditor to be straightforward and sincere. Straightforward and honest, right? Straightforward and honest in all professional and business relationships, right? So should you be straightforward? No, I can see a loss of 1200 crore and I am going to report this loss of 1200 crore, and I'm not going to say your accounts give a true and fair view. I am going to give an adverse opinion saying that they do not give a true and fair view. And are they giving a true and fair view? No, they are not giving a true and fair view. Right? So what does it say? Straightforward and honest in all professional and business relationship. It implies the fair dealing and the truthfulness. That means no fake. And nothing fake. You know, this profit of 700 crore is a fake thing. It effectively means that he shall not be associated with reports, return, communication, or other information which he believes contains a materially false or a misleading statement. So that 700 crore profit is a materially false or a misleading statement. Are you getting the example? That 700 crore profit is a misleading statement or materially false information, or contains statements or information which is provided recklessly. You understand? Say there is a company which is into defense manufacturing. Some products they manufacture for the defense purposes. And now they have received the defense order from the government of India. And government of India has said that this information you need to keep it confidential. Government of India has said that this information you need to keep it confidential. What they did, this information they gave it in their financial statements. And now they are saying, auditor, you sign the audit report. Auditor says, I am not going to sign the audit report. Why? Because you are recklessly providing the information. You've been told by the government of India that you are not supposed to disclose this information. Still, you have given it in your financial statement. So, recklessly providing the information. Are you understanding that? Right. Or omits required information. So, one, what is not required to be given, they are giving. And second, what should have been given is not being given. Like say environmental laws have not been complied with by the company. So they should mention in their financial statements, no, environmental laws have not been complied. We have paid 2,000 crore fine during the year. This they are not saying anywhere. And we have received order from government of India that they are telling everywhere. They have got a fine of 2,000 crore. They've got an order for 2,000 crore. Are they giving that information? No, that they are not telling anybody. But we have received an order from government of India. That are they telling everybody? Yes. So providing information recklessly or omits the required information where such omission could be misleading. Where such omission could be misleading. Are you understanding? Now, why is it so important that integrity point also I should be knowing so properly? Because it can become a correct and correct in the exam. How they make correct and correct in the exam? Integrity requires auditor not to be straightforward and honest in all his professional and business relationship. Comment. Did you understand? Some of you don't understand anything. You're so blessed in life, no? No difference. Whatever anybody says, they are blessed. You understand what question I created right now? Kya question create kiya maine? Kya bola? What did I say? Right? Comment whether the following statements are correct or incorrect. Okay. Integrity requires auditor not to be straightforward and honest in all professional and business relationships. What will you write in the answer? Incorrect. Integrity requires the auditor to be straightforward and honest, and then it implies fair dealing and the truthfulness. It effectively means all this story writing you have to do in front of it. You understand? They just give you the hint, the first line. But obviously, do you need to write the entire content for the 2 marks over there? You say, ma'am, for 2 marks, I need to write so much. Yes, for 2 marks, you need to write so much. Ma'am, so much? Yes, so much. You understand? No. For 2 marks, do you need to write so much? Yes. Sometimes for 2 marks, you have to write only 1 line. So then that is so much. Every time the so much changes. Are you understanding that? Okay, right. Then after that you have the object. Let me finish with the ethical requirements, right? Then you have the objectivity, the principle of objectivity. Now, when there is a profit of 700 crore shown and actually there is a loss of 1200 crore, and what you are doing, you are saying, oh, there is a profit of what you say, profit of 700 crore. Are you compromising on your objectivity? Right? Are you compromising on your objectivity? So the principle of objectivity requires an auditor not to compromise. Professional judgment because of bias. Why bias? Because they are telling you we'll increase your audit fee from 25 lakh to 1 crore rupees. Or conflict of interest. Why? It is my uncle's company. So uncle company, how to say a loss of 1200 crore? No, uncle company, that is why profit of 700 crore. So conflict of interest. Or undue influence of others. Right? So there is a pressure given to you by the management of the company. Right? So undue influence of the others. So what is that? That is the objectivity. Are you understanding what are we discussing over here? Right? The ethical requirements. What are the ethical requirements? Integrity, objectivity, PCDC. What is PCDC? Professional competence and due care, confidentiality and the professional behavior. So far what I have discussed with you is only the integrity and objectivity. We take a break and then we continue with the other ethical requirements and also come to the qualities of an auditor and then some other discussions also.